Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We are coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I am Remy Blair, and joining me today for a market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Good morning. Happy Friday, Tai.
Good morning. Happy Friday. And it's November 1st. It's All Saints Day, day after Halloween, where, I think in the 7th century, the Pope said, we need to celebrate the lives of the martyrs and the saints. But something close to your heart, it's World Vegan Day.
It is. I know. I was just passing by the cafeteria down here at the New York Stock Exchange, and I heard them talking about it being Vegan Day and how they have special vegan offerings.
Well, I hope it's good. I hope it's good. I know you enjoy it.
I will definitely check it out. And it's also Jobs Day. So
oh, yes, it is.
We got the jobs report, and the headline figure, non-farm payrolls coming in way lower than expected, but at the same time, unemployment remaining at 4.1%. But what a reaction for the markets. We're seeing green across the board.
Yeah. Really, if you look at the board, it's really pretty small green, led by, Amazon. Which is up 7% because they had really a blowout sort of beat on earnings. Revenue was pretty good. Revenue was very good based on e-commerce, advertising, and cloud. What really actually was interesting to me is they said they're spending $75 billion in capital expenditures, a lot of it on AI this year, and it's going to be even more next year. So it really, those are big numbers, but I think the market is really impressed. Their revenues are still ahead of their costs, which is why they rally so much. But just getting back to the jobs number, I mean, we had no idea what it was going to be because of all the problems from the storms and as well as the strike. And the headline number came up at 12,000. Lower than sort of expectations, but I think a number that the market would sort of shrug off. But to me, the big one was actually revisions. The revisions the past 2 months were down 112,000 jobs. Now, most of that was actually, it's a 2-month revision, so most of that was actually from August, even though the last month, if you remember, it was 254,000 jobs. That was revised down about 30,000, and 223,000, whatever it was, still a really, really good number. So the job situation is, I think, still a little uncertain. Certainly doesn't look like it's cratering, but we'll have to at least get through maybe even next month before we get to some semblance of normality. The other thing I would mention is hourly earnings were up a tenth, and hours worked up a tenth as well. Not sure what's behind that. I think I want to look for a trend for a couple of months before we make any decisions, but like you said, the unemployment rate was unchanged on a rounded basis. I noticed that gold didn't actually rallied a little bit, and then it's now back lower. But I think what's amazing to me is sort of the stock market is up all green today. So did we just change our minds after the turn of the month?
Yeah, that's very interesting because yesterday we saw red across the board and we saw tech sell off as well. Right. And in today's session, we are seeing the major averages higher. So why don't we do a quick check of where the major averages are? So right now we're seeing the Dow Jones Industrial Average up by nearly 500 points, up over 1%. And the NASDAQ is also soaring, up by about 1.25 percentage point, up by over 230 points, and the S&P 500 is nearly up by 1% as well this morning, and higher by nearly 57 points. But let's take a step back and look at what happened yesterday because we got those earnings from Amazon, as you mentioned. And when we look at the Amazon chart, we are fast approaching all-time highs today. We're inching closer to that level, but we also got earnings from Apple. So any surprises for you there?
So Apple beat very nicely on earnings and revenue, but they noted sort of China weakness. And I'm not sure where is it this morning? In the extended hours last night, they were down a couple of percent because there was lower guidance, and it really Apple is down. Looks like it's down almost 2% so far. And what's been the tone of this earnings season is you can beat on earnings and revenue, but if your guidance is low, they're really punishing you, and they're punishing Apple for that. The China weakness, in terms of the phones, is really hitting the. Still tremendous company, but they're getting punished for that. Intel was, on the other hand, beat on revenue and had positive guidance, and they're up like 8 or 9%. Now Intel has really had a really kind of rough run of it. This year down a tremendous amount. So they're really kind of rallying from a very low base. So 9 or 10%. It's a sort of an eye-popping number. There may be some value here, but another thing is just looking through all the earnings. The Intel AI chip, their AI chip, which it reminds me a little bit of BlackBerry. Right? 5 or 6 years ago, they were riding high, and now they're like really downtrodden. And BlackBerry actually disappeared after being in 2010. Everybody had a BlackBerry. 2015, they were practically gone. Right? I don't think that's going to happen to Intel, but Intel's AI chip, their orders were a little lower than expected, so they think they'll sell $500 million worth of that chip this year. AMD's AI chip, $5 billion. NVIDIA's AI chips, $100 billion. So it really tells you that, just to get an idea of the scale and the different differentials between those companies and why NVIDIA has done what it's done. Now, they have a big moat, as well. I think I mentioned earlier this week, but it's not a moat that's going to be there forever. So it doesn't take more than a few missteps, and then there might be somebody else. I mean, who really had heard of NVIDIA except gamers like 5 years ago?
Yeah. You bring up an important point there. And when we're seeing a sell-off one day and a partial recovery in one day, it does make you question what's going on when we're talking big picture.
Right.
But while we look ahead to next week, we know we have the election and, of course, the Fed Reserve meeting right after the election. So there's a lot of uncertainty there. But on the heels of this jobs report, it does look like a 25 basis point rate cut is baked into the cake as we head into the weekend.
It is so baked in. I think I looked just before the show, and I think it was 99%.
Yeah.
And there was a little tiny bet, like 0.2%, that said they'll do 50 in November. I don't think they'll do 50, but I will say that let's watch out for Nick Timiraos. If he has an article today or Monday, I'm paying attention. I faded that guy last time and didn't work out so well, so I don't think it's going to happen. I think 25 is the right move.
Okay.
I think 25 in December is probably the right move, and then you want to sit on your hands and see what the new administration is going to do, especially if it's President Trump's second term.
And speaking of new administration, now that we have this jobs report out of the way, two other things that we're talking about include the Fed, and we just talked about that, but of course the election countdown. So November 5th.
Let's take a look at the election. We've been doing a review. Let's see if we have graphic 1. We've been doing a review the last 2 Fridays to see where we stand. So this is from Real Clear Politics, and I did this actually early this morning, about 1 in the morning. Let's take a look at the green and pink chart up there, and what that shows is on a week-to-week basis, in the 7 swing states that will decide the election, how Trump is doing. And so green on the column of the 31st of October means Trump has improved his lead over the previous week. So he's improved in Pennsylvania, North Carolina, and Georgia. And remember, he only needs those 3 states to win. Harris has shouldered her way up to a tiny lead in Wisconsin and a small lead in Michigan, which are part of her blue wall. She really needs that blue wall to hold, and then she needs to take probably Pennsylvania and or North Carolina to make it work for her. Trump still leads in Nevada, but by a smaller margin, and he leads now comfortably, I think fairly comfortably, in Arizona. And once again, looking at this day in history, 5 days to the election, you can see that in 2016, Trump was starting to gain on Clinton, and this is a few days after the Comey news about her emails had come out, and you can see that that started to hurt. In 25 days out, Biden was ahead, pretty comfortably in the swing states, but now Trump is ahead marginally in some of these states. So I'm going to maintain that Trump has a 55% chance of winning. That hasn't changed. The Senate 75% chance to go for the Republicans, but I think the House is really a toss-up. And I think that will actually depend on President Trump's coattails. If Trump has a big night, the House probably goes to the GOP. If he doesn't, if he barely wins, then the House may actually swing over to the Democrats. So let's look at one of the things that we've been talking about that the market has been paying a lot of attention on because there's been a lot of news on it is the betting markets. So there are three betting markets. So if we go to graphic 2, I took a snapshot of the betting markets last night. So on the left is the poly market, and that's the international one. Americans cannot actually bet on that, and there was a big whale who bet, I think, $12 million on Donald Trump, which is why he's up 62 to 38% in that market. But the other ones are quite a bit tighter. Predicted is from Australia, and it's a little bit of an odd one and has Donald Trump only at 55% versus 50% for Vice President Harris. They don't add up to 100. It's just how that specific market works. But Kalshi, which actually I downloaded a couple of days ago, and Americans can bet on it, has Trump at 57.43 over Vice President Harris, and I think that's actually a pretty good market. I think that's about right. I put some money on Vice President Harris a couple of days ago when she was only at 38% because I just thought that was priced incorrectly. What's interesting about Kalshi, and if any of our viewers want to go take a look at it, they're pretty new. They were only able to get into the election markets, I think, around September because they won a lawsuit. Some of their markets are a little off. So one that I just put money on while I was sitting on the subway because I saw it. It's you can get, but for 30 cents on the dollar, you can bet that Trump wins the Electoral College but loses the popular vote. If he's going to win, there is almost no chance that he wins the popular vote. Basically 3-to-1 odds, I'll take that all day. I think I might add to that bet just because it's mispriced. That should be 50 to 55, not 30%. So some of these markets in these smaller betting places occasionally are wrong. I think that one's wrong. They also have Sherrod Brown. You could buy Sherrod Brown for 38 cents on the dollar. It's a dogfight in Ohio. He may win, he may lose. I think he wins, but again, that's priced wrong. So we're keeping an eye on this, and I guess we'll talk about it a little bit on Monday and Tuesday as well. But that's the wrap. It looks like right now that Trump holds on, but I think it's still very, very close.
And speaking of very, very close, we know that both candidates are out on the field in different states as we head into the rest of this campaign cycle, but only a few days to go. So what states are you watching very closely right now?
It's really Pennsylvania and North Carolina. Pennsylvania's 19 votes are very, very hard to replicate. If Trump does not get Pennsylvania, he'll practically have to win one of the blue wall states. That's Wisconsin and Michigan, which are going to be more difficult for him. And one reason, I was in Philadelphia last weekend, and I'm really happy that actually I don't live in a swing state because I was watching one of the Yankee playoff games, sadly, and in between sort of half innings, there were literally 3, sometimes 4 political commercials from both sides, and you're like, can we please stop? In New York, all I have to deal with if I watch The Rookie with my daughter is the Skyrizi commercials. I always laugh because Skyrizi, I think it's a Crohn's disease drug. Crohn's is a very serious disease. But the thing that kills me about Skyrizi, it says, if you're allergic to Skyrizi, don't take Skyrizi. That always amuses me, but man, that beats the people shouting at you from the political ads, and there's been so much money really on both sides that they're spending it all now. So I think in the swing states, you're getting deluged by the political ads, of which are spend the money now. I mean, although I suppose that if you don't spend all your campaign money and you retire, I think you get to keep it. So maybe save a few shekels for the end.
Well, Tai, before we wrap up the segment today, I do very quickly want to take a look at one of the leaders on the Dow Industrials average this morning, and that is Boeing. So Boeing is up this morning by 3.5%. So what do you think is going to come out of the strike meeting when it comes to next Monday?
So as you said, they're going to schedule the vote for Monday, and the union this time is sort of is ratifying, is telling their members to do it. They're getting 4 years and a 38% pay raise. They originally asked for 4 years and 40%. In addition, they're getting $12,000 as a ratification bonus, as it's kind of a signing bonus, which is exactly the same what they got last time that they rejected, 64 to 36%. The last time it was a $7,000 bonus and $5,000 in your 401k. Now, certainly, $5,000 in your 401k might grow to be a lot more eventually, but it's not money in your hand. So in this case, they get 3% more. It's been a 7-week strike. I think they will vote probably the other way, maybe 65-35 to settle it. I think they ought to, because at this stage, what are you holding out for? Because I don't think, especially with the successful $20-odd billion equity raise that they had this week, I don't think they're not getting the pensions back. They're just not. I think Kelly will die on that hill. I think they ratify this, we get this over with, and hopefully by the beginning of the year, those airliners will start rolling off the assembly lines at Boeing again. So optimistic about that. I think the market is why Boeing is up, and I think Boeing, probably worth a little accumulation here. It's not going away. It's at lows for a long time, or not far from it. I think there's a little value here.
And Tai, when we think back, it's hard to believe it's already been 7 weeks since the strike began, and we know how much they are losing on a daily basis, and the risks here to their credit rating as well. But we've talked about this when we're discussing the Boeing strike, in addition to the international longshoremen strike as well, and how much is lost on a regular basis. But in terms of all the moving parts of the organization, from contractors to suppliers, how long do you think it'll take until everything starts coming back online?
I think it's going to be the beginning of the year, because some of those suppliers have actually laid off people, and and you have to get those people back. Not 100% of them will come back, though most will come back. They're good jobs and specialized skill set. So to get those parts suppliers back online, to make sure everything that hasn't been looked at for 7 weeks is working properly, and I think quality is really, really important given what we've seen in the past few years. So better to wait an extra few weeks to be sure than to have another door blow off a fuselage in flight.
Well, Tai, as always, thank you so much for joining me for the market briefing. We get a pause before we head into election week, so have a great weekend.
You too.
Thank you. And coming up next, Eric Norland, Executive Director and Senior Economist of CME Group. We'll be right back. Don't go away.